All right, we're doing this. By the way, check these out. Yeah? All right. So we are live streaming this thing from here right now.
It doesn't work.
Yes, it does. Now it does.
The speaker.
Oh, speaker doesn't work. That will be fixed. However, the live streaming works. Great.
Hello.
111. 1111. Hello?
Hello.
Hello?
And it doesn't work. It doesn't work.
Hello.
This one's not working. We need to turn off the music.
Randy Singer is the best.
The middle of both is so far.
But it doesn't work. The speaker. Like 2 hours. Okay, we do one first training. Then we do it.
Oh, it's just here.
One.
What about this one? This one's that also?
One.
This needs to be louder, right?
One.
Is that any better?
One. You hear the one? What?
Hello. Can you hear me?
And here?
Hello. TJ.
Take a picture.
One.
Miami is like
Yes, please. Here's the book.
We are.
It's not ready.
He's not ready.
Yes. Yes.
It was all that equipment. It's only people. No big, basically no big deal.
Showed up?
When I go to companies, they ask me $20 on the website.
No, you have. Yeah, I think we'll just 1 second. No, you just have that here. Oh, right.
Thank you.
Thank you.
Can you send that to me? Send that to me.
Uh, just the screen. It doesn't show the screen. All right, you know what? I'm bringing it.
Go. I'm gonna take a photo. Yeah.
All right, mics are good.
Ready?
Oh, no,
One this way. Hold on. Doing one more.
No.
Go. One more. Sorry.
I'm gonna get on the Wi-Fi.
TJ.
I did. I got one from the cloud. Okay.
All right.
Wait, TJ. Can you bring my ginger ale?
See about your harmony. Raise your hand if you're in the pose. Basically everyone. We have a German. We have a German car. I do work with the day. I don't have your certificate. Tomorrow weekend. I don't have your certificate. Tomorrow weekend. I think we have it.
Ladies and gentlemen, we tried.
The mic?
We're gonna use the mics now. Oh yeah, you got it?
What are you trying to do? Stream?
Yeah. Just have a little presentation going.
It's got thousands of people.
Don't worry.
Who would want to
Hello?
like streaming? They're gonna speak.
Yeah. So we're gonna then we're gonna yeah. But
How do you say the last?
Hair Shack. Like Shack.
Greg, look. Here. Thank you. Oh, you want this shit? All right. Thank you.
So welcome everybody. We're happy to have you here. We have a first time panel here in Miami to see and to engage and to educate people about some crypto, about some stock, a little bit of everything, investing in Bitcoin, how to trade, day trading in stocks, how to invest. And we have here three amazing people. Greg Mangashok, whatever, is very difficult last name. You know, if you get it, you tell me how to spell it.
I say I've made it when people know how to pronounce my name.
Then we have Brody Carford and Mary Silverstein and me, Sigal Hillel. So we're going to start with who is the first in this panel? Mary. Okay, ladies first, you know.
Hi, I'm Mary Silverstein, and we're here to talk about investing in stocks and crypto. I can talk about how well, different. So when we talk about stock and crypto, as an investor, you could treat them the same, but they are different. When you're buying shares of stock, I'm not sure if when you're buying shares of stock, you can look it up. I don't know how many there are, but you're into the company, you're buying equity. When you're into crypto, you're not buying equity. You do know how many exist. There will never be any more made than what it says. It's technology, and you're buying a part of the technology. You're not buying equity. So when you go to buy Bitcoin right now, and the value might continue to go up, you're buying a piece of technology, software. So Bitcoin itself was built on blockchain, it's all technology. And because Bitcoin came along, other people started to make things like it. So that's why that entire space of crypto is now exploding. It wasn't built necessarily about money. It's built about having software that you do not need a bank for. And if I want to send you money, I can just send it to you in any hour, any time, any amount, for any like $1 overnight. I don't need ID. I don't need to go to the bank. Okay. So Bitcoin and Ethereum, which I assume you've heard of, these are protocols. These are base layers when you're building apps. The internet right now that we use is HTTPS. The goal in the crypto space is to remove that and use something with unlimited transactions that is decentralized. So I'm just trying to give you a little info here into the crypto space. So I personally have been traveling until COVID. I was traveling the world for about 2 years, and I was studying startup companies, technology, and at that time, especially crypto. And I was looking for people who are inventing a product that I thought was solid, that would grow, that would be a good investment, that maybe I could get in for 5 cents. It could turn into numbers like what Bitcoin is today. It went to $40,000. That's not making a 2x and a 5x. I'm looking to make 100x and 1,000x. And the only way to do that is to actually sit down, do your own research, talk to some other people, and get to know products, people, and the technology. So I really spent a while doing that. I can say that this past year has been phenomenal. All of the crypto, by the way, in the past month of December is all through the roof because the whole entire world has realized that this is real technology, it's the fourth revolution, and everything's about to change. So, you know, if you're not familiar, you can just download an app. We have some really great apps that they are regulated by the United States that are safe that you can use. And right in your phone, you could just transfer in some cash. You can buy some crypto. You can trade it every day, or you can just hold it if you don't want to be bothered. And Bitcoin is definitely on its way up. It's a fact because we have every institution in the world buying as much as they can. If you prefer stock, you can buy Grayscale. They've been buying up as much Bitcoin. Them and PayPal have bought the most in the past month. They're buying it as fast as it's being made. There's only 21 million Bitcoin. There's about 20 million mined. We've lost a couple million along the way. And the exchanges themselves are going to start to run out of it. And I'm sure you all know you do not buy a whole Bitcoin. You can buy any fraction you want by $10. So we have apps now like Voyager, which is the newest one that I like. And I get interest on my Bitcoin, on my cash. I put it into Cash Dollar Coin, dollar for dollar. And it has a portfolio. And, you know, Coinbase is what most people know, but they are pretty busy. They went down yesterday. They charge very high fees. They don't give that much interest. And I can't open it up and know how much did I buy and how much is my profit. I need to see that. and so do you. So if you can make interest on everything you're holding while it's going up, 5.5% on Bitcoin, while it's going up every day, you're making it both ways. And the interesting thing about this interest is not the same as a bank. This is because you're buying a piece of the technology and now you're part of its ecosystem. And therefore you're go round and round. As it's mined and made and people hold it, we're part of the system. So Bitcoin itself was built, by the way, there's no owner, there's no server, it's a consensus. And it's mined by anyone who wants to mine it. For the rest of these coins, each one's different, they have different purposes. They won't all be about money coins. They're about all kinds of different products that we're going to use. So I suggest that you go onto any site that sells it, read about the top 20 coins, and pick a few out and see what you like.
Hi, I'm Brody Crawford. Real quick, raise your hand if you've made money on any of my buy nows. A few people. So I'm going to teach you guys how to find those buy nows before they become buy nows. But first, I have 10 rules of trading. So the first rule in stock trading is stock trading. The first rule is you have to know what company you're investing in. So like, you know, Tesla is electric vehicles. So that's the EV stock, which with Biden, you know that it's going to go up. Also, with the second rule is if you buy a stock at, say, like $1, you don't, in your day trading, you don't want to let that stock go more than 5% red ever. So if it goes 5% red, that means the stock too high. So if it does, you get out and you rebuy more shares lower. Rule number 3 is you have to be willing to wake up at 4 a.m. or 5 a.m. because pre-market is actually where you make the most money. Because if you get into these day trades between 4 and 5 a.m., that means that you get into these stocks first before everyone else. And then when the market, then everyone else jumps in and you're the first. So you make all the money. And then there's another factor is Robinhood starts trading at 9 a.m. So if you get in before the Robinhood traders get in, those stocks are going to go up 100 to 200%. And the other factor is also you need to have 2 different platforms. You have to have one platform for your short terms, which is your day trades, and then you have one platform for your long terms. Because a lot of people are like, should I hold this stock? Should I sell it? Should I do this? So if you have your long-term platform, then you check that like once or twice a week versus your day trading, then you can watch those all day long. And my specialty has been memorizing penny stocks patterns. So based on patterns, if you watch JAGX, JAGX, you know that it goes from 0.27 to 0.55 to 0.85 to $1 to $2, and then it'll drop back down to 0.27. So with that, if you memorize these stocks patterns, you know when to get it. Memorize these between 100 to 200% every single day. Like I called the stock this morning, FT 1.5 and $5.50 in one day. But tomorrow it's gonna crash because all the hooders are gonna get out. They're gonna buy the trending stock for tomorrow. So that's why with the day trades, you get in, out, and then you get in, others get in. And I'll tell you guys in a minute, but I'll introduce you to Greg.
Let's see how this works with 2. Hey? Okay. Hey, everyone. I have been into decentralization. I like to say before it became cool. Before crypto, there comes along every once in a while a technology that just changes the world, right? Electricity is obviously one of those inventions. The computer, you know, the Mac or personal computer. But I want to go through a history of, see, this is why you have a fail-safe, a backup. So anyway, I want to go through a history of the web, because what we're seeing now is actually a disruption of existing institutions. See, before the technology, we had institutions. So, for example, all of you grew up buying newspapers probably once in a while, right? From those things, the boxes on the street. Those publishers used to make money on that. You grew up buying magazines in the stores. I mean, they still exist, but you kind of read stuff online these days. But it wasn't until the web came out that really disrupted publishing. Now think about this, the web. So before the web, to publish something, you needed to have infrastructure. You needed access to gatekeepers who set up that infrastructure, who owned it, and you needed permission. Permission to publish your article in a magazine, in a newspaper, perhaps have a TV show, right? You needed to be discovered by the music industry. The internet and the applications built on top of it and the protocols have changed all that. It started with, I mean, you could say it started with email, you know, don't have to ship physical items. But the web really turned publishing on its head. It's permissionless. It's a protocol, HTTP. Anybody could start up their own web server. So we start there. What did that do? Now, instead of infrastructure, you deploy code, just some code. And that server is sitting all day answering HTTP requests from some clients. The web browser took the world by storm. Everyone uses a web browser today, right? Wasn't always the case. The first web browser invented by Tim Berners-Lee came a long way. What happened? The internet unleashed trillions of dollars in new wealth creation. How? The web, I should say it. How? Well, we've got models like software as a service. We had e-commerce, right? If you put all that together, every industry, everyone's now on the web. But the web was lacking something, and they made Web 2.0. The web was about publishing one way. I publish to you. You read, you consume. You don't publish back. You don't talk to my audience. I talk to you guys. Now, the Web 2.0 is about taking this mic and giving it to all of you guys, right? So that is, the first ones were what? Friendster, right? There were these little ones, I don't know if there's Russians in the audience. Wimit.com, okay, whatever. All of it got subsumed by Facebook eventually. Everybody migrated. There was MySpace, there was Friendster, right? Platforms. Look at what happens. Web 1.0, we've got a massive change. Amazon opens up, Google opens up, Facebook opens up. Those were never possible to open up on a permissioned platform like America Online. You think America Online would let Facebook open, keyword Facebook, see your friend? No, right? How about Google? Search AOL. Not gonna happen. Amazon. Obviously, they're gonna compete with their own. So the web, by being open source and permissionless, the web allowed anybody to create their own value. I think a lot of people are fans of this. Okay, so the Web 2.0 stuff. We all today are, in a way, connected because of Web 2.0. But it wasn't really, the ones that we use today are not the first ones. They're not necessarily MySpace or Friendster. There was a new generation, and that's what I'm going to talk about. And my talk is the new generation of crypto, because crypto is really Web 3.0. It is, so if Web 1.0 was about publishing, and Web 2.0 is about communication and connection and collaboration, right? The C, okay. Then Web 3.0 is about that plus transfer of value. So you can now transfer value, and to do that, they had to solve the double spend problem. Now, double spend problem, really not going to get into. There's only one, okay, but what do I do when it grabs out? So the double spend problem, just to put it briefly, before you solved it, you couldn't have a payment system that was decentralized. Say I owe person A money, right? Say I owe Brody here money and I owe Mary money, okay? And I come to Sigal and I say, hey, Sigal, can you lend me $10? Right? It's only $10. I could pay you back. Which what she doesn't know is I owe all these other people $10. There's no central ledger that she could check. So credit reports were a poor man's ledger, okay? And there was a lot of politics, and sometimes your credit got stolen, okay? Your idea is so stupid. Somebody knows your social security number. It's like your private key. It's like, oh, I can open an account now in your name. Crypto, way more secure than that. So basically what happened was Web3 is about communicating. We already had that, but now it's transferring value. What I want to emphasize is that this is not the end of the evolution, okay? Bitcoin was the first popular network. It was the first network, really, to really take off and that has solved the double spend problem. Basically, I can store value in my own wallet. That value is a share of a fixed pie. It's never going to grow beyond 21 million. We know this because all the programs and the consensus agree on this fact. And anyone who doesn't agree is kicked out instantly, right? So unless you want to start your own fork, not going to happen. So people own this little thing, and then everyone wants to store value in it because it is so secure. It's secure against inflation in the sense that nobody can print more of it, and it's also secure in the sense of nobody can steal, nobody can make a transaction. Like a bank can't take your account to zero unless you sign with your signature. Now you got to keep your keys private, but that is decoupled, unbundled from what the bank provides. You can still have that. There's custody services, and you can give your friends part keys, and a certain portion of your friends can reconstitute your keys, et cetera, et cetera. But Bitcoin, yeah, there's going to be very similar. The problem was it's still a very geeky technology. It's still very early on. And the thing is, it's early days for crypto because, sure, storing your money is great, and Bitcoin excels at that. But what happens when you need to actually use your money? What happens when 1 million people have Bitcoin and now they all want to use it in some way, send it in some way? They'll quickly find that the fees are $100 to do that. So there's going to be other applications. Now we're talking 5 years from now, for example, if you have Bitcoin, everybody has Bitcoin, and it's $1 million a coin, that's great. But to do anything with it will cost $100. Like right now, Ethereum, to do anything is like $10. Right now. Ethereum is a programmable Bitcoin where you can do more than just send money. You can actually have a programming language where you can have variables and arrays and do smart contracts, which I won't get into right now. But my point is, people need something that scales, and people need more applications than just storing money. So the next generation of crypto, which I'll talk about, is essentially about other applications. Because if you have all these applications, people, and I'm going to stop here. I'm just going to say one last thing. Prediction. I'm going to predict something. In 3 to 4 years, we're going to be living in a world where Bitcoin's approaching $1 million per coin. And then it's not growing as fast, and things are slowing down. At some point, it can't grow forever. At some point, well, it can actually grow forever. I mean, inflation is forever, 3%, because the government always prints, at some rate. But at that point, people are going to say, I want to use my money somehow. And there are going to be crypto networks. And it's not going to be in dollars anymore, denominated in $1 million. It's going to be denominated in Bitcoins. You're going to have Bitcoins, and you're going to be like, I want to put my Bitcoin into this thing where I can transact and do these things that I want to do. And then the value locked in Bitcoin is going to go into those networks. And there's 4.0, if you will, okay? Which is going to be using and programming the value, perhaps for entire communities, rather than just peer-to-peer. So for now, we're living in a wealth transfer from dollars into Bitcoin and other cryptos. And in the future, I predict there's going to be eventually a move from just storing your money to moving into something which can essentially help you actually use that stored money. And then once you are in it, you may never cash back because there will be a virtual Bitcoin in that network that's pegged to the real Bitcoin. So why go back if you can just use this better, let's say, faster network or whatever. But for the time being, for the next 5 years, Bitcoin is going to be, I think, the dominant crypto with the most recognition, and that's where we're living today.
Let's talk about why Bitcoin is better than gold. So if I want to
But
go to the
I
store
just
and buy
wanted to say, because the Bitcoin is high and then it crashed. So the big question is now when it's running up and up and up and up, if it's not going to go down and down again, you know, because everything is a wave. So how you protect yourself and how you know, that's the big question now.
early 2018, as you know, Bitcoin ran up to 20,000 in the end of 2017. There were governments that were telling you not to buy it. They were banning it. They were trying to stop you. And that's what people pull out, and that's why it crashed. The people inside the technology space never stopped building the technology. That's why the past month of December, you saw all these companies blowing up in the crypto space, because they've been working. They don't care what the price is. They're working. They don't care about it. So all of this technology takes time. And when you build it 5 years later and it's really good, even if the purpose you built it for fails, the technology still exists. And another company will come along and buy your coin and buy your technology. So you paid money for it and you thought, oh boy, I got scammed. We'll take it back out because someone's going to buy it. And tomorrow it's going to be used for something else. So technology takes years to build, and the biggest companies in this country cannot start today if they want to use it right now. It'll take them 5 years to build solid things. So things that are worth nothing right now, maybe a penny, tomorrow could be worth a lot of money. So if you liked it then, take it back out and use it. What I was going to say is the reason that Bitcoin is better than gold is pretty much any reason you would ever use gold for. How much gold is there? How easy is it to take with you wherever you go? How easy is it to spend right here in the restaurant and buy dinner? Well, I can do all that with Bitcoin. And Bitcoin is slow, and it's the first one. So what we're looking to do is build versions of it that are faster, better to use as daily transactions, we call microtransactions, and therefore Bitcoin's just become a storage. It's a good place to store it, and institutions around the world seem to finally understand this.
By the way, this does not happen on the Bitcoin networks, just so you know, because there are 10,000 microphones, and one of them always works every 10 minutes.
Okay, so into the crypto space before I teach you how to find those bangers, is what we call them. Is how many people know that this year was the year Bitcoin had what's called a halving? You know what halving is? So that means that miners mine in half the amount. So that's why the price drove up. So if you knew in August that Bitcoin's having a halving this year, which the next halving is in 2024, Bitcoin goes like 300%. That's why in 2017 it crashed, because the last halving was in 2016 and all the coins got mined and Bitcoin went down. But the reason why it won't go down this time is because all the big institutions are investing into Bitcoin now. Before they were not. So basically how you can factor that is, on the next halving is 2024, so Bitcoin won't go to $1 million until 2030. But for now, it will go to about $65,000, and then it'll crash down back to $50,000.
Why will it crash?
Because of the mining until the next halving. Those coins are mined, then it can't go up anymore until the next halving, and then it'll double again. As far as stocks, the way to find the certified, what we call bangers, is we use a platform called Webull, and it's very easy to use. And there's a part at Webull that shows which stocks are trading the most volume, because we know volume is what changes the price rapidly, right? So if you get into, say, tomorrow, CTRM, before with 1 million volume, as you see it rising, you'll see the volume starting to about 100 million to 200 million. We've seen Hertz stock, when it went from 1.1 to $4 a day, it had 1.6 billion volume in one day. The goal is to get into these stocks before the massive amount of volume happens, and then get out, because the next day all that volume is gonna crash. You know what I mean? And
all right. Absolutely right. What are the factors for making something go up or down, right? Supply and demand. I mean, there's stuff that leads into that, but that's what it is all about. We know how much supply there is of Bitcoin. Now, let's talk about the demand, right? The demand comes from people who learn about a new technology, right? People learned about Skype. They downloaded Skype. There became a network effect, and Skype became more useful. If only 3 people are using Skype, you can't call people. Same with Bitcoin. You need more people to come in, learn about it, adopt it. Now, until this time, there was some skepticism about whether Bitcoin would be a store of value. Because to be a store of value, you have to actually hold your value. Okay? If people get disillusioned with Bitcoin, and let's say Litecoin catches their fancy, then eventually if Bitcoin goes down, then it's not a store of value, really. But because now, this time is different, right? TM, this time is different. Could be wrong. But this time is different because institutions are buying Bitcoin. I say this time is different because the government's allowed them to. Earlier this year, the US government said banks can custody crypto. That, to me, was the big watershed moment. Banks can custody. PayPal said, we're going to custody. We're going to make it available. Then there was Square, Cash App. Yep. There was a time when people tried to custody it years ago, but there was a regulatory chilling effect. They weren't sure if this was what this is. Now that it is a reserve, let's say, one that is limited, right, like gold, it's actually beyond, I would argue, it's beyond not going down, okay? It's too big to fail, and it's almost like bringing back the gold standard through a back door. Okay, because the government of the United States and other governments got off of the gold standard, okay? Now, there are different schools of thought about this. There's Austrian economics, right? There's people who think that we should have a sound money, a money that never grows, etc. And then on top of that, we should have layer 2 solutions, etc. And then there are people that say we should have an elastic money supply, and there are monetarists that say, if there's Keynesians, for example, say there's a recession, you have to print money, because otherwise there's going to be a depression and you got to bail people out. Well, regardless of what your view is, the government did print money. So this time last year, I was worried about a recession, and going into a pandemic, I was really worried about a recession because everything was closing. Had the government not printed the money, cash would have been king. Bitcoin would have been kind of going down slowly. Every asset, real estate would definitely be going down in the pandemic, in the cities. Assets would be going down, but government is driving. Both of them? Really? Both? Oh, they're not charged.
No, I'm guessing.
They're not charged. Well, luckily for you,
You have a good voice.
I have a good oratory voice. Okay, I'm gonna finish, and you guys can charge this. So, if I may, dear sirs and gentlemen and ladies, the point being that government is driving this bubble just as much as everything else. The government gave everybody $1,200. Thanks. The U.S. government gave everybody $12 checks. Guess what the top amount was that people bought on Coinbase last few months? The mode, $1,200. They took their check.
April, those people that bought 1,200, they took their whole $1,200.
Just speak up, it doesn't
They took
matter.
their stimulus checks. They were showing off before the month of December that it turned into $3,443. It's probably worth $5,000 right now.
Basically, it's an interplay.
It was a smart investment on their part, and that's what all of us here are trying to say, is that instead of, it's not how much money you made, it's how you invest it. And if you're willing to put it into things like this, early startups, and truly the future of everything on our planet, every industry, there's a lot of money to be made here because you are interested in this.
Does that one work?
And then also, like, if you have, like, say, like $4,000 and you don't want to put it in Bitcoin, you can day trade cryptocurrencies, basically the same as stocks, using a platform called Crypto.com. It will show you which stocks are traded VeChain at 0.15, and a week it went to 0.30, and you made 100% in a week. Based on the volume that is traded, and then also regarding the stock market, one of the main things is Wall Street focuses on different industries every single day. So if you figure out what those industries are, like today is electric vehicles, solar, and semiconductors, you know, to day trade those stocks that day, whereas say Thursday is biotech and pharmaceuticals, your electric vehicles stocks aren't going to go up on Thursday. Your biotech and pharmaceutical stocks are going to go up on Thursday. So I know and have memorized which industries is going to pop each day. So I know which stocks to call. And if you memorize that, you know what stocks to buy before, like the day before, and then you can go up 100% on each stock that day.
See, Brody and I are so different. Because I like to say that I don't know what's going to pop tomorrow, but I know what's going to happen 5 years from now.
I'm in the middle of the two. I want to do my research. I want to buy it, hold it, and as it moves up, I'm going to always take some profits. And if I like it, let the rest ride.
That's right. So if you want to invest, you have to have a sound logic. For me, I'm just going to say my advice, the safe advice is like this. Buy Bitcoin because it's a good reserve currency it's going to be, and institutions are buying it. So if your pension fund's going to buy it, why don't you just buy it? You know, they're going to buy it for you. But don't just stop there. You can lend on Bitfinex and other things if you're American or not. I'm not going to go into, you know, what is legal or not, or what you can't, if they exclude you. But my point is there are a lot of people who borrow on margin in order to trade in volatile times. And if you don't know how to go up and down, which I don't, just be a lender, and you can make 25% APR on average per year with crypto if you do this, because a lot of people speculate.
Wait, hold on. Greg, would you go all in on one stock?
Unless I was really sure, or it was $10.
I wouldn't say just buy Bitcoin to people. I would say, like, just like stocks, you have to diversify your portfolio. So don't just buy Bitcoin. Like, if you have $10,000, put 3,000 in Bitcoin, 1,000 in Ethereum, 1,000 in Maker, 1,000 in Litecoin, 1,000 in Seller, because then you have 5 different cryptos making you money versus one. And then if one goes down, you still have 4 others making you money.
I totally agree, but I do want to say, can I be honest? Like, can I ask an honest question? Like, people have said that the crypto market goes up and down together in a way that's very correlated. And the other thing I want to ask is, I myself noticed a pattern, but I don't know if it's real, because like I didn't have skin in the game enough. I want to ask you, the pattern that I've noticed is Bitcoin's the dominant one. It goes up first. If you look at it, you could backtest this. Then Ethereum goes up next. Then usually it was XRP. This year it got sued, so it was Litecoin. It was Lumens, which is the same technology, just different company. I don't know. I think it's weird. Why would they go into Lumens if XRP is getting sued? But regardless, but my point being that It used to be Bitcoin, Ethereum, and then, so my question is, if I hold all, like I thought always, but I was never disciplined enough to do this. When you have a good paycheck come in, and Bitcoin's been sitting around for the last few months not doing anything, that's the time to buy, in my opinion, Bitcoin, because you know Bitcoin goes like this, then it goes up, down, on a new level, goes like this, goes up. You want to know, you might not know and time it right, but if you keep putting it when it's not doing anything, then when it pops, my next thing would be like, is it going up? Buy Ethereum, don't buy Bitcoin. That's my question. Buy Ethereum, because it's next, and if you happen to time it correctly, I think it would be like 5x times 3x times 2x, and then that's more than if you had just, done one thing, because you're kind of like multiplying your, you know what I mean? Is that a real strategy? Would it work, you think?
You can do that, but I would just say buy all of them. And a legend over there, his name is Steve Kennedy. He taught me about a platform called Nexo. So say you have $100,000 worth of Bitcoin, right? If you put it in the Nexo, it gives you an instant credit of $50,000. So then you send that $50,000 worth of Tether to your wallet, and you can exchange it to Bitcoin and send it back to Nexo. And then your 100 grand just turned into $150,000 worth of Bitcoin within 2 hours. And then you can split that in half, buy Ethereum with the credit they give you, and then your $150,000 worth of Bitcoin just bought you instantly $25,000 worth. Does that make sense? But based on what you patterns wise is each one of these has different patterns based off of time of day. So we know Bitcoin's the highest at 3 a.m. and we know Ethereum's the highest at 5 p.m. and we know Litecoin's the highest at 6 a.m. So that's when you know when to buy and when to get out.
That's really cool. That's right.
I mean, I bought Nexo like 2.5 years ago when it first came out. It's great. And so they do the lending platform. This is another reason we don't need banks, by the way, in the future. Our own money in our wallets. We don't need to go to a bank for a loan. We don't need them really for anything. We can do everything through the direct source and not go through them to go to another source. And that also is something that we got from Bitcoin. It's from me to you. We don't need a bank in between.
So like, to answer Sigal's original question about the gold and how it's different than gold, you can't carry around $1 million of gold and try to send it to Japan. That costs you a lot of money. The more gold, the more money. With Bitcoin, it's like 10 minutes, 30 minutes, 3 confirmations, and it's always the same fee. It's still probably going to be a $100 fee, but that's much less than the gold. The thing is, the banks, I will say, the banks won't go away. The banks will adapt. You know what they'll do? They'll treat Bitcoin the same way they treat other commodities like gold. Treat it as a reserve currency, and then you'll keep your Bitcoin in a bank and you'll lend out. Okay?
But then there's still only 21 million Bitcoin, and now we have honesty. And what we're looking for is honesty. We want transparency, and we want to know the truth. So when you pay your taxes to your government, you want to know where it goes and what they do with it. You don't want to hear, brr, they just keep printing more money, because that's not really going to work in the end. So what we're doing is we're sort of redoing the entire monetary system for the world. And I'm telling you the truth that every country is building a new monetary system as we speak. You will see that within this year of 2021.
So actually, to that point, I think that's a good next topic. Centralization versus decentralization. Okay.
Wait, real quick.
Yeah.
Does anybody have any questions for us that we can answer for you?
The previous topic. Or does anybody want to hear answers to any questions? Yeah. Yeah, speak up. I'm going to repeat your question. Oh, here, you want a microphone, actually? Here, come.
You might want to look into the camera.
Oh, it's camera. I didn't know that. So thank you. So great overview. And I agree, a lot of these things are interconnected, right? And I haven't been investing in crypto itself, but I've been investing in miners. Oh, sorry. Okay. So I've been
Like
investing
Mara.
in miners.
Give him that microphone, actually.
Better?
This is the
Much
microphone.
So what do you think about actually investing in miners versus the actual currencies, right? Because you're still kind of getting the flavor, you're getting, but you're buying companies, and they're, as you were saying, Greg, earlier, it's very interconnected. When Bitcoin goes up, they all go up the next day, or maybe in a few hours. But yeah, anyways.
All right, so actually, that's a very good question. If Bitcoin goes up, there's like 5 different stocks that you can buy that go up with it. So for example, I knew because of the halving, Bitcoin was going to skyrocket this year. So I called a stock called Mara, M-A-R-A, at 1.4, and now it's at $20. And I called Riot at 2.50, and now it's at $24. So that's a very good question. Yes, investing in the minor stocks are amazing right now because all the cryptos are skyrocketing as well.
Yeah, I want to say that since kind of all up here have our own thing, with bro. Oh,
Let me see if I can do this. Yeah, I'll do this. For now.
So bro, his channel, that if you want to know and you want to have access to his mind and his research and his experience, he's got a channel. I've totally different. I got a project that's long term, basically, that is exactly redesigning the monetary system, but it's working. It's compatible with the existing monetary system, but it actually needs to be scalable, and it's a new technology because Bitcoin, like I said, it's based on blockchains. Blockchain essentially is a chain of blocks. I know it's shocking. It's software. These computers around the world run what's called a consensus algorithm. It happens to be they decide who wins by who solves the puzzle, who spends the most electricity. And it's not necessarily always spending the most electricity. It's like a lottery. When you find that answer to every 10 minutes to that puzzle, your block gets used in the chain, right? That architecture was the first one. It's like the MySpace of Web 3.0. But the block is global. The consensus is a very expensive operation. It's global and happens every 10 minutes. Turns out you don't need to have global consensus about every transaction in the world to solve the double spend problem. If I give you $1, you don't necessarily need to look for every other person in the world. Oh yeah, okay, so Mary wants me to explain mining. Bitcoin mining is part of this process I'm telling you about. So I go ahead and Mary pays me some money, and until there's a third-party ledger, these are all what's called trust lines. She trusts me, I trust her, money goes back and forth. But she doesn't know how many other people I owe. That's where third-party ledger comes in. That's where money goes from being debt to being value-based. So if there's a third-party ledger, then whatever is there is my balance, and everybody knows. So so basically the third-party ledger needs to be able to take more transactions all the time. When people pay one another, that ledger needs to record that. But so with Bitcoin, the idea was let's have one ledger for everybody, a blockchain, and the next set of transactions that happen in the entire world, let's send it to all of these computers called miners. And one of these computers is going to be the one to put all the transactions into the next block. Turns out there's a limited amount of transactions that can happen because the block is finite. And so, what is it? Like 7 per second. And Ethereum has like 15. And Bitcoin Cash has maybe more, like 100.
And the solution and the one we're looking for has unlimited.
Right. So I was going to say that my project is one of several, but we're not trying. We've already architected and solved it. We're just building it, raising money to build it. Our project is in two two things. One is the platform, the protocol is a new protocol that has unlimited transactions per second. And you might find that shocking in crypto world because, oh, unlimited, how can you do that? But actually every internet protocol has unlimited transactions per second. HTTP, unlimited websites per second. The more computers join the HTTP protocol, the more websites they can serve, right? Email has SMTP protocol, same thing. Nobody asked like how many conversations can humans have per second? You know, it's like obviously the more humans, the more conversations. The reason people ask how many per second is because there's a bottleneck, and the bottleneck is the miner. That computer is the one that has to, all transactions in the world have to go through one computer every 10 minutes. Could be a different computer every 10 minutes, but that's the cap. That's why Bitcoin fees would have to skyrocket if everyone tried to use it at once, and why there's layer 2 solutions. So bottom line is that I just want to say in 5 years, there are going to be new technologies built on better architectures, and Intercoin is one of those. But it's not just about the protocol, it's also about what you use it for. So I just want to say, HTTP is cool, but websites are cooler. You know, you got to actually build applications. Yeah, decentralized apps, like a UBI for communities or other things like that.
So the answer to your question is, don't buy Bitcoin at 40,000. You could buy, like if you put $1 million in Mara or Riot or Ebon or BTBT, in a month or two, you'll make way more than what you make if you buy $1 million worth of Bitcoin right now. But you can take the profits that you make on those stocks and buy Bitcoin with that. So you can buy the stocks, take the profits, buy Bitcoin, and then your Bitcoin will add up over time.
And I'm going to say a different, completely compatible thing, a long-term strategy. And it's a bit self-serving because I am a startup entrepreneur, okay? But talk to any VC that's made it, you know, funded Twitter, funded Facebook, and they'll tell you they're very happy. Getting in early on a new small thing, small cap, that has potential to grow and be the next big thing is where I think a lot of the money is at. If you're lazy and you just want to make one bet and not and set it and forget it for the next 10 years, it could be Facebook, it could be Skype, it could be whatever. The next Bitcoin is out there, folks. So that's a little self-serving because I work on Intercoin, you know, obviously, but it has to be a small new project because where's Bitcoin going to go? Its market cap can maybe go another 20x. A new company can go 100,000x, right? But you have to actually look at the fundamentals and see, is this the new thing? Because when people saw Bitcoin and they took a chance and they said, you know what, institutions are going to buy this one day, they're right. Now they're right. And you're kind of too late to make the kind of returns they did. But if you follow Brody, you can still make those returns by day trading. Understand what I'm saying? Yeah.
Make the money now, take the profits to make the money long term. That's what you should do.
Oh, come. Yeah.
Something a little paradoxical about everything. Great.
Can you come? Yeah.
I can, but
Okay.
I have a good oratory voice.
Nice. No, it's for the folks online.
Oh, yeah.
Yeah.
No, so, okay, so thank you for the presentation. It's very interesting. So there's something paradoxical about what you're describing because technology is ever evolving. So as bigger and better, like your thing springs off and we're here and we're in on it, what happens to the people that were on the old technology and how it doesn't become obsolete? And then, oh, those people are going to lose all their value.
The thing about cryptocurrency, actually,
But I know you said.
the thing about cryptocurrency is it will never become obsolete. Basically, the new world currency.
There aren't even enough out there yet for everything that we're going to do. We mean every industry in the world, whether it's your healthcare, it's your travel, it's your ID, it's about food chain, it's about supply chain, it's about knowing how to move 800 cars from here to there, and instantly the software takes care of it. Done. Everything becomes better. We can remove certain people from every industry and re-put them back, probably to coding, and make this world more efficient. So it doesn't matter. And like I said, if you have some coin, as long as it was real technology and it's in a drawer and you think it's lousy, it'll be back because other companies will buy them, companies will merge, and we're already seeing that. And he mentioned Stellar before. Stellar hasn't moved in 2 years. And all of a sudden it's popping up now because one of the governments wants to use it as their money.
These cryptos get adoption. Can I use that mic for a second?
Yeah, there's another example is the iPod turned into the iPhone, which is now the iPhone 10, but the iPhone never went obsolete. That's the perfect example.
Oh, the iPod, yeah. So technology, I'm going to put this all into context for you. Remember how I said there's Web 1.0, 2.0, 3? Would you go back to physical newspapers and magazines now that we can have blogs and we can have websites, right? Probably not. Would you go to having, getting off of social media? You say you would, everybody says they would, but you're still on it. Most millions, billions of people. When people get a taste of something, they can almost get addicted to it. Sometimes it's bad. Like how many times you check your phone, right? And that notification pops up during dinner. Sidebar, by the way, this is a tragedy of the commons, okay? The companies all need to take your attention because if Facebook doesn't do it, then Twitter will do it, and then they will have more engagement, which is what is the money in that world of Web 2.0. So it's free. Your attention is free because Apple doesn't charge for notifications so much. So I wish they did, because then it would be a calculation for the companies, but it's not. So it's free, so it's a tragedy of the commons. And that's just one small tragedy. And okay, I'll do another sidebar because my first company, Cubics, was all about social media, and we actually raised, let's just say, raised a $250,000. We made $1 million in revenue. We've reached 8 million people now around the world, 95 countries. That's my first company. Intercoin's my second company. With my first company, so I really got into social media, and I'll tell you, it's not an accident that we're divided so much as a country, okay? And then one half of the country thinks reality is one way. Another half of the country thinks the same reality is totally different way. And they don't trust each other. And it comes down to everything. It's not an accident. It's because of the system that we live in, the economic system we live in. So what happened is that the internet disrupted journalism. It disrupted newspapers. They had to pay journalists. How are they going to do it? Okay, how are they going to do it? Well, they found out that if you say only one side of the story, your audience loves you. And if you start saying, oh, well, actually, there's a second side, and actually it's not as bad as we said it was, you know, because there's another side to the story, everyone's going to tune out. They're going to go to their sensationalism. So clickbait. One is clickbait. And sensationalism and outrage. It's not an accident. That is what sells. Used to be sex sells. Now it's also outrage sells. The second is that social networks are in a race to the bottom for advertising. Advertising is constantly less and less and less. That trough is drying up. So they need to get you into echo chambers. The algorithms say, oh, you were outraged? Oh, you were engaging with this thing? We'll show you more of it. We'll show you stuff you agree with. Look how bad those guys did. Now be outraged. Now engage. Click on some ads. So our society is in echo chambers because centralized social networks have put us there. And centralized, I should say, news organizations have become clickbait instead of how they used to be, which is much more journalistic integrity. So our society is affected by the economic system that we live in these indirect ways. But anyway, to answer your question, technology constantly progresses. It has some bad things, disruption, but also has some good things. And usually we don't want to go back. Now, having said that, yeah, people get off of old technology, and every technology we're talking about today, it's going to eventually become old. Bitcoin's going to become old, and
Bitcoin's going to get better first.
And Intercoin's going to become old. Everything's going to become old, and your grandchildren will be like, I can't believe you used Bitcoin and Intercoin. I mean, what were you thinking? But for now, it's going up, and people believe it is the best way to store your money. And if more people believe it, then it's a self-fulfilling prophecy, and it's going to drive the price of Bitcoin up until something better comes along.
And if you're interested and you're not in the Bulls versus Bears group, come to me after you to the group so you can day trade all day with us and make some money together. And just remember, always have two platforms for crypto and for stocks. one for long term, one for short term. And that way you'll never mix up, like, should I hold this one?
Yes, Rima.
Or should
T0, Security Tokens Exchange, the first one being built. I love it. I've invested in it early on.
Which one?
And T0.
Is that crypto? I just
Not
use
crypto, security
crypto.com.
tokens.
I use crypto.com. I love it because it gives you a debit card. And if you spend $100 on your crypto.com card and Bitcoin goes up $300, you get that $100 right back.
T0 is more like the stock market, but it's in the technology we're talking about. Those are securities. So all of NASDAQ is now building the same product. They're going to use the crypto technology, but they'll be security tokens. And our government is slow because they want to make sure it's very safe, or we would have been there even faster. But T0 is the first one to think of it. They started in 2014, and they have all their licensing, their technology. And imagine if you can say crypto, wait, I want to buy that stock, and you can just sell the crypto and buy the stock and do the same thing in one place instead of what he's saying is two different places. That's what they're doing right now.
So let's wrap it up, this panel. So I would say in each one of you, Brody, Mary, or Greg, what you recommend? One tip. Each one of you give one tip.
Join the
One
Bulls
tip
versus
can be how to
Bears
start, how
group.
to make a money. What?
Join the Bulls versus Bears group and
Okay,
buy my
that's
buy
part
nows.
of Fun Jet Setter. That's not a problem. That's tip number one.
Never feel pressure to buy into anything or do any of this that you're not comfortable. Go at your own pace. If you want practice first, and see, you might be a long-term holder. You don't want to look at it every day. You might want to learn from him how to do this every hour, every day. I mean, that's just brilliant, but I can't go that fast. So I want to do my research, take my time, think about where it's going, maybe put my sell order in so when it hits that number. Or you might want to think about the far future, things like what we're talking about. Because if you can get in again for pennies on the dollar and this thing blows up, just like buying into HTTPS, that's the protocol we're looking to build here. Imagine the amount of money you can make building, investing in that.
Yeah, I'm going to agree with Mary here, basically. My sentence is invest in early stage opportunities. And if you're curious, go to intercoin.org. And there's a lot more info if you liked what I had to say.
So thank you all for coming. I hope you enjoy. And if anyone has more questions they want to ask before we wrap it up here, are we all good?
Any other questions?
So we put up a website for this panel. So if you want to get in contact in any of the speakers or learn more of any features, we are welcome you to the link, and any one of you I send it as well, so you can get access.
We're going to
and
give you our own token soon. We're going to have our own token for you.
token on Fun Jets that are coming very soon. FJS. It's going to be the best
taking
token in the
over.
world.
Woman's
Fun
taking
token.
over.
Let's make the
Social life,
FJS
social
token.
world.
That will be the best token in the world, you know, Fun token.
Every
You
time
can buy
you
anything,
travel,
car, travel, jet.
Run by
You
a
said
woman.
money can't buy fun, huh?
Fun is number one. If you don't have fun in things you do, you don't have nothing. That's my motto. That's why I create Fun Jet Setter. But that's another topic in another panel. So enjoy your night, and thank you everyone for coming.
You guys are great. You know what? I want to make a token called love, just so I can say that you can buy love. So, yeah.
I'm a friend of Mark's. Nice to meet you.
Nice to meet you as well.
I'd love to hear a little bit more.
Absolutely.
I do investments in blockchain.
Yeah. Oh, you know? Yeah. We met like in Monaco first time. Yeah. Actually, in London first time, and then in Monaco. Yeah. So
I do Day job, I help funds raise money, help companies raise money, but I'm also a single family office, so I invest in blockchain funds. I've invested in some fund of funds, I've invested in
Oh, fantastic. Yeah, I can send you more information. We do equity and tokens. So,
yeah, I'd love to learn more.
absolutely.
I enjoyed the conversation.
I appreciate it. Oh, we even got some comments on here.
Yes, I do.
Okay. And
All right, I want you to watch my crutch in this video. So, this is what everything else looks like. Everybody? And to everybody online, if you want to get in touch, email Sigal, what is your, how do we get in touch with you?
So Sigal Hillel official in Instagram, Sigal Hillel in LinkedIn, 1917-690-8480 WhatsApp and cell, and sigal@funjetcetera.com.
And if you want to get in touch with me, Mary Silverstein, I'm Blue, BLU, angelinvestor.com. Cody, if anyone gets, how do they get into the website?
7836. Text out the website yet.
Whoa, are we live? What's going on here? Who is this? Who set this?
Yeah, we do.
All right. Go to intercoin.org and you can find me there. And yeah, just if you want to invest, you're welcome to. All right. Thank you very much for watching.
Enter INTER.
INTERCOIN.org.